So the markets have been moving quite a bit in the past couple of days, and I see a lot more activity on Twitter, on YouTube, people getting interested in price again, because I mean, it's expected when the volatility is low and then it finally comes back to the markets. People want to know what's going on. So I wanted to give a quick update here. It's not really a price update because nothing has really changed from my previous price updates. I have been saying that so long as we are in this big range, which is more or less between 7,000 and 9,000, or just below 7,000, from 6.8K to 9K, I personally wouldn't day trade or try to trade this range. And I know it's a big range, but I don't care. You don't have to trade every hour of every day. Sometimes it's so much better to just do nothing and let the markets, shake, go up and down, and then you can trade when the conditions are better. Because in my opinion, trying to trade within this big range between 7 and 9,000 more or less is the easiest way to get wrecked. Very, very hard to predict these sharp moves up and down. But I wanted to use this quick update to explain, to give a tip or a lesson on volume, how you can use the volume indicator to anticipate reversals in these sharp moves up and down in smaller time frames. So it's very, very simple actually, but you have to go into smaller time frames, because if you are looking at the daily candles, for example, or even the recent weekly candle that just closed yesterday, it's quite a long candle, so you don't know where most of the volume was. If it was at the top of the candle when the candle opened, or if it was at the low of the candle near the closing of the candle. You don't know where most of the volume is in this long candle. So for this, you have to go into smaller time frames. I recommend the 1 hour time frame. So if you go into the 1 hour time frame, you can see what's been going on inside, zooming into these weekly or daily candles, long candles. You know what's going on there, where the bounces were and where the volume was. The technique is very easy. If you see most of the volume, the big volume is at the top of a rally, you see a breakdown candle with a big spike of volume, this signals smart money or smart traders taking profit at the top of the rally, which means price will probably go down. Now, if at the top of the rally you see a breakdown candle but no volume whatsoever, and then you see the big spike of volume at the bottom of the downswing in these smaller time frames, that signals that this is not smart traders taking profit. This is weak hands panic selling the bottom. So if the big volume is at the bottom of a downswing in these smaller time frames, this is people being shaken out of the market. This is weak hands panic selling the bottom, which usually signals a reversal. So wherever you see the big volume, the big spike of volume, whether it's at the top or at the bottom, this signals a reversal, which means if it happens at the top, we're going to reverse down. If it happens at the bottom, we're going to reverse up, bounce in the upsides. It doesn't happen like this 100% of the times, but it easily happens like this 70 or 80% of the times. And usually if you see a spike of volume at the bottom, a significant spike of volume at the bottom, the price will almost always reverse. But sometimes, it's a little bit of a fake out, because soon after we will have a lower low. So that happens sometimes as well. That's why you got to be careful. But usually when you see low volume at the top of the rally and then a spike of significant red volume at the bottom, this usually signals all the panic sellers are out already, or maybe is shorts getting squeezed, shorts getting liquidated, and then the market, it signals that the market is ready to bounce and reverse. So you can use this to spot tops and bottoms of these sharp moves in this part of the market. But again, I really don't recommend to trade in between 7,000 and 9,000. I personally am not selling anything. I'm only looking for dips to increase my long positions and my long-term holdings. But if I was into taking profits, I would have been taking profits anywhere between 8,500 and 8,200. I think that was the time to take profit if you are into, trading, shorter term trading. For me, again, I'm just waiting for dips to increase position. Unless you're doing dollar cost average, then it means you buy every day no matter what price it is. So yeah, that was a quick update. Thank you guys for watching. See you soon. Bye.